How do you expect the supply side to evolve from here, Jeff?
Well, I think that this announcement is pretty close to being over home plate, which is why the market has taken it rather benignly. I would say that the consensus view in our view was 0 in May, a million in June, and a million in July. What you're likely to get now, and that's reversal of the original unilateral cut. You're probably going to get something like 250, 350. 400, and then a reversal of the cut. So it amounts to the same thing. The only difference is you're getting a little bit more upfront in May. That's rounding error for all practical purposes. And I think the bigger point is what's going on the demand side. The demand numbers rock solid in the U.S. I think there's two things we want to point out about the demand picture is that one, it's not just mobility and a rebound in services in the U.S. Today's ISM shows that, hey, it's part of manufacturing. And I think the other point, too, is that when we look at growth right now, and this was apparent with the PMI in Germany last week, is that it's not just about China and commodities. The West is a very important part of this overall story. So it's broader across the economy and it's broader across geography. Mm-hmm. Yes, you have the lockdowns in Europe, but we think that that's a temporary speed bump.
So, Jeff, that's the demand side. I'm wondering how you looked at the supply side in relation to OPEC. I mean, part of the conversation was that Russia and Kazakhstan were going to want another exemption, but the UAE and Iraq were going to say, no way, not again. We want to sell the oil that we want to sell. What kind of pressure do you think we saw from them?
Well, when you look at the rest of OPEC, 20% of them cannot reach their quota right now because of underinvestment. The fact that Saudi Arabia could cut production by 11% and watch prices rise by 40%, and we still not see a supply response in the current environment is telling you that in the very near term, supply is nearly inelastic. And those that have the capacity, which are primarily core OPEC, which is the GCC countries, and Russia, are sitting on all the spare capacity that really matters. So we'll probably see some of that increase in coming weeks. But I think the key message here is supply is mostly inelastic right now.
You've laid out the demand story. You've laid out the supply side. How do prices go higher from here? Given the setup that we're seeing with what OPEC is doing, the story in the States, we know what's happening in Europe, but we're looking through that. It's all in the market, Jeff. Where do prices go? Can they be more elevated?
Our target's $80 a barrel on a Brent basis in 3Q. I think as you heard it from OPEC themselves, they expect demand to be up 3 million barrels per day over the next 3 months. Their supply is up 1 million. That means that the deficit that we're already in is likely to accelerate. We do expect inventories to be normalized by sometime late 3, early 4Q. At which point we need to start talking about bringing on new production. And that goes back to that point. There's no investment going on in any of these markets. I mean, you've seen a small increase in drilling in the U.S., but nothing really that significant. So I think the bigger point, thinking about not only is there strong demand going on in energy and metals and across the commodity complex, there's no investment in supply. Saudi faces an inelastic supply curve near term. The planning intentions came out yesterday, big disappointment. We've seen no greenfield investment in metals. Production in Latin America, in Chile, the exports are down 20%. I can keep the list going on and on and on. We don't have supply of these commodities. We got a lot of demand. Inventories are drawing. The upside here, I think, is substantial across the commodity complex.